Joining our closing bell exchange today, we've got Eugene Profit from Profit Investments, Gordon Charlop from Rosenblatt Securities, and Jack Bouroudjian from UCX at the CME in Chicago. Good afternoon to you all. Gordon, if I start with the action today, I mean, quite a yo-yo session. Clearly, volume's a little bit thinner given that the bond market is closed. Back towards flat at the end of the day. Is that encouraging?
Well, apart from you being the catalyst for the move today, Wilf, I think that we can be encouraged by what we've seen today. You know, but you can't get too crazy, obviously, with the bond market being closed and the fact that it's Thanksgiving in Canada. So to your Canadian viewers, happy Thanksgiving. That being said, the action last week was interesting, the way they sold off in light of rates, in light of tariffs. Volatility has gone up, and I think we'll see volatility stay up here right through elections.
You had another factor for why we were soft last week related to buybacks.
Well, what happens is when you have earnings, the companies are prohibited from standing their ground, if you will, and buying back stock. So if you have some of these technical signals and some of the prop guys and some of the quants start looking to head to the exit, there isn't as much support there. So again, Friday is a big day. Some of the smartest guys on the floor have said to me, arguably the smartest guy on the floor said to me, you got to watch out what happens with financials on Friday when the earnings start coming out. That will be the barometer that we'll be looking for as we head into earnings seasons. And the action this week until Friday will be indicative of what we should be seeing as the trend moves forward.
Eugene Profit, great name. Is it the fear of rising rates, which is keeping this market jittery? Don't forget, we also walked in this morning with a 3% plus decline in the Chinese stock market and Italian bonds and stocks under some real selling pressure.
Well, Sarah, I think today is actually a good example of what we're going to see over the next couple of quarters. Make no mistake, rising interest rates will eventually calm this market, but we're in an environment in the U.S. where corporate earnings are high, you have low unemployment. In Europe, the economies are a little bit weaker, but the sentiment really is that the market's going to go higher. But the fact is that we've had three interest rate increases and we expect a couple more. So it's sort of a situation where sentiment will eventually change, but it won't happen today.
Jack, when you see the headlines out of China overnight, over the weekend, in terms of the action they're taking to keep the economy going, two questions. Do you think that shows that they're hurting a lot more from the U.S. trade tariffs than perhaps people have thought so far? And can it come back to hurt the U.S. as well if China does indeed slow down?
Yes and maybe, and let's tackle both of those, I guess. Yes, do I think that they're feeling the pressure? Absolutely. In fact, I think what we've been experiencing over the course of these last few sessions is, a good old-fashioned Chinese global margin call. They have been selling everything. They have been held to trying to hold their yuan up. That's something that people aren't really addressing all that much, but the yuan has been under serious pressure with the way those Chinese equity markets have been acting. Now, can it hurt the U.S.? Well, I think if it spills off into a deeper and deeper tariff war, then yeah. But remember, tariffs in and of themselves are a weapon of capitalism, and you've got a communist nation fighting a capitalist war right now. I'd be real careful if I were China where they go with this. But the bottom line is this, that if the markets here were reacting a little differently, in that you saw equity markets probably 5 or 10% lower based off of the velocity of the move that we see in interest rates, then I think we'd be concerned. But we're not seeing that. This market is digesting all of that selling and all of that pressure and everything that's happening overseas very nicely. And I think over the course of the next few sessions, October again is scary and it's a quiet period, but I think we'll be okay.